Hi, gang. I'm back after a few month hiatus. Reason being, I was building a new website, and I hope you will visit that. It's called BeyondTheGoldenSpiral.com. Of course, and additionally, I had a small time case of salmonella poisoning that put me in bed for like 12 days. So here we are. And so the theme of the week is that we're cracking the code for intraday trading with price and time vibrational square outs and volume. Okay, now the thing is, most of you know, a lot of you know about volume studies. You don't need me to teach you volume studies. Although some of you who do volume studies are probably looking for a more precise place to take to engage the market than you have. And for the people, my people who do price and time vibrational work, we have to integrate the volume into the pattern because it's the whole thing that counts. Now, I'd appreciate if you like and subscribe. It will help the channel because we're really just basically getting started. And here's my standard disclaimer. So let's get started. We're doing mostly 1 and 4 minute charts on the Dow futures, and later on we'll do a stock and some gold on bigger time frames. But for right now, what we're basically doing is calling out the biggest volume bars in the area. And on a 4 minute chart, those are very attractive. As you'll see, they attract the price action. And that's very important because what we need to be able to do as traders is be as precise as possible, not get in too soon, and have a very good idea of where it could turn. Now, of course, we're never going to be 100% accurate, and sometimes the market's going to do something completely different. But if it's going to do what we think it's going to do, we need to have stay a step ahead of the game and have some type of an anticipation of where it could happen. And what we need to do is track the bars to make that happen. So in this case, we've got a lot of selling action right in this area. And what ends up happening, we have a high in a larger time frame. We won't get into that right now, but it's the high. It was 45,042, and for us to keep it simple, just 042. So it rallies up to 943, which is a 44% retracement. So what you're seeing here is a replication of numbers. And numbers will replicate in different ways on the charts. And the bottom line is these are some of the best buy and sell signals you'll ever see. Don't believe me. Check it out for yourself. Okay? You'll see for yourself. Now, why did I put this one here? Because we're looking for the biggest volume bars in the area, right? But I've called out this one. And this one's not even near the size of some of these. So why is that? Because this is still in the pre-market. And right here is the biggest volume bar, and this is a 4 minute chart, in the overnight action. So that carries some weight. Now in this case, okay, the market opens and you get all these other people coming in, and it peaks at 743. It drops below this volume line, probably because it is after all overnight volume, and the bigger opening hour volume is going to be more powerful than that. But it still respects the line. I mean, that's incredible that it just comes right to the line, which is what you need to pay attention to. And then for our work, high is 743, 44% retracement, and you got the drop of the morning. And it could be as simple as that. It's not easy, gang, because you have to track it. You have to win the battle for your mind, and you can't get tempted into things by imposing your will on the market or having FOMO or stuff like that. You have to wait until things line up. But when they line up, you know what? Good things come to patient people. I can tell you that. Now, the next one is right here, comes and respects the line. And as it turns out, this one, the high of this little consolidation is 737, and it's a 36% retracement to this. So this is lining up at the volume. I mean, this is a nice bull trap. And as you could see from the same action, okay, it's the same action, only a smaller time frame. What we have is the buyers that bought over here. They got trapped up here, comes down to here, consolidates, and the peak comes in at 737 at 36%, but there's one more. That's why I'm showing you the 1 minute. That's why you find something good on the 4 minute, you're going to have to scale down to the 1 minute because you're going to get even greater precision. You're not going to get better precision than this. We just discussed replication, right? Well, the top comes in at 51 minutes after the hour, and this failed retest, which we already told you at a 3736 vibration, is 52 minutes. So you got this replication working with 51 and 52, and then it goes over the ledge, and that was the move of the morning. Okay, so we move on, and we go here. Now, sometimes, now this is in our advanced studies manual, is that we have climactic volume. And some people who are not initiated with the volume really all that much, they're going to think, oh, gee, the bearish volume picked up. It's probably going to drop even more. But this one's on a trend line, okay? We don't have the bigger picture here. And what ends up happening at climactic volume that you need to recognize is that everybody who has sold, who wanted to sell, has sold. And so how do you know for sure? Well, you never know 100%, but that's where the price and time work comes in. And what we have here is a 437 low, and I'm not advocating that you take the trade over here. I really like the advocate of taking the secondary, and which in this case has a calculation where it's 37, it's a 37% calculation, and this is taught elsewhere. But the bottom line is, what I could tell you in this video is that you have 88 points up, 46 points down, and let's look at the next video. The next slide shows you a close-up of this, where you got the 88 points up, the 46 down, which is 134 altogether, and 134 just happens to be 37% of a circle. See, basically what I'm doing, and it's new to a lot of you, is that a lot of what Gann was doing, and that's why they try to put fans and all kinds of stuff on these charts, and it's not easy to do, but basically a circle is a three-dimensional object, and what we're doing is taking that three-dimensional object and applying it to a two-dimensional price chart. So we don't really need to draw circles or anything like that. We just need to know the numbers. And that's what this is all about. And so most people, they're going to do the retracements. They're going to take the 46 into the 88 and come up with a number. But nobody really thinks to add the numbers together because they really don't know what to do with them. But, you know, this is cutting edge stuff that you're looking at here. Let's move on. and we have this big tree volume bar over here, which means it needs, eventually, it's the biggest volume, and it's this line, and then here. So it's basically this line. It basically needs to hold this level in order to go higher. Now, why would it do that? Let's take a look. This is a polarity flip, a replication flip, excuse me. And what ends up happening, and I've discussed replication of numbers elsewhere, this is a flip. This is even more advanced. And these are such of the best buy and sell signals. I'm showing you lower hanging fruit here. This is 47 points up. It comes to its resting point at 47 minutes after the hour on a 1-minute chart. Now, I told you at the top that we are breaking the code for intraday trading. That's not hype. That's reality, okay? And while this is simple, it's a simple concept. 47 points, 47 time. Price and time square off perfectly. And why does this move kick in? Because it's doing it at the big tree volume bar that I just showed you in the last chart. Right here, right? We're concentrating on here. 47 points, 47 minutes. This is a 4-minute chart. That's a 1-minute chart. It's pretty cool, isn't it? So let's talk about this bull trap. For some reason, people bought after this high, and once again, the high is in a different time frame. So that's not the point of this teaching. The point of this teaching is to get the precise place, to take advantage of the price and time and volume, put it together so we can crack the code on all this trading, right? That's what we're doing. Bottom line, it comes back and tests that line perfectly, right? You think that's a coincidence? So, but why is this so important to you price and timers and you volume people? 716 to 650 is a difference of 66 points. In terms of the retracement value, you got 106 and 40, so it's a 37% retracement, but the bigger leg is 2.65 times the smaller leg at a 66-point differential, and that's what makes this work. So you got to move right here from 50 to 85. It's a 65-point move. How about that? And then it finds its low. Now, this is something that happened in the last couple of weeks. I forget which news event this was. There was all together. It could have been Trump's tariff for all I remember. I don't know for sure. Don't hold me to that one. But you could see huge selling volume right there. That's the key point. And then we draw the line at the top of the bar, top of the red bar. This is a 4-minute chart. And just look at the price action. It spends the whole rest of the day testing the line. It tests it twice. Now, what do you do with something like this and not get cut up? Well, if you're going short over here at 474 for whatever reason, we're not going to get into that now, although there's plenty of replication here. You got 50 points, 51 minutes, you got 51 degrees up, okay? So that's what makes 474 an attractive place. Do you have to realize that after it starts going down, it's probably going to retest that line again. And if you're here and you're looking for a target, the big tree volume stuff is a very good price magnet. So when it ends up happening, the first retest of the low, Price point is 356, and it's 157 bars off the bottom. So you got perfect price and time again. And so, but as it gets closer to the morning, I guess, a different crowd wanted to retest it. You got a 474 high. You got 74 bars down, 74 degrees from here to here. So you got 74, 74, and that's where it goes parabolic on the open in the morning. Say it takes all night to set up to get that crazy first hour action sometimes. So if that doesn't show you that you should be paying attention to both the price and time and the volume, I don't know. I don't know what else to tell you. So now let's change up, and I know not everybody's interested in 1 and 4 minute charts. But look what happens here. This is a gold chart, okay? You've got the biggest volume in the neighborhood over here, right here. We draw the line across. Now this trend line hasn't formed yet, okay? So the bottom line is it peaks over here right at the line. And once this dot forms, then you can form the trend line. Then you can connect this low and all the dots to get the end, because this is actually the low. Okay, but let's take a look and see why the market topped where it did. And for that, we got to look at the next chart. And this is a 15-minute chart where we see that it's 42 and a half 15-minute bars up, but the retracement value is 71% and 142, right? Let's go back and I'll show you. See? The bigger leg is 1.42 times the size of the smaller leg, which retraces it at 71%. But what ends up happening, you got your retracement of the bigger time frame here, right? And then it stops going up at 42 bars. So once again, this is a price, and this is another way that price and time squares out on these charts. So this is another gold chart. And what ends up happening here is that this peaked in a larger time frame. Okay? This is the recent gold pullback. This is your bull trap, because you got the biggest bullish volume that these people bought here, and then they look how this thing just hugs the line. And this is an hourly chart. It hugs that line for hours. For hours. Why does it do that? Because the biggest volume bar is a magnet to the price action. Eventually it goes down. But what happens when it retests the line perfectly and forms the new trend line, which pays off over here as well? It's 113 hours from here to here with a price of 3413.8. Do you think that's a coincidence? I doubt it. Now, I already discussed the cumulative reading with you. So you got 120 down, 57 up. You got 177 cumulative with a high at 3476. Folks, if this wasn't what the market is doing, the odds, let's just say if the random walk crowd was right, if this was completely random, the odds would have to be millions or billions to one against these things lining up this way. Okay? So if you don't know this, you're like playing the market with one hand tied behind your back. I mean, that's the truth of the matter. And then we have Tesla. This is probably the ultimate massive bull trap that you will see on an hourly chart. The highs in a larger time frame. Okay? The gap up, the gap, this is your gap and crap, right? Look at that. Ultimately, it comes to this bar. It's a 44% retracement at 44 bars. And for that, you have to see it on the next chart right here. So you have an intermediate high here. You got the top, you got a secondary high, and then you have what we just looked at. And what we have here is a high at 344, 44 bars, and it's a 44% retracement. And eventually, as you could see, it's a pretty nice drop. Okay, so that's basically our short video for today on volume work. We have a lot more information available. Go please check out my new website. It's called beyondthegoldenspiral.com. And we had a little faux the first week or so. Some of you may have already seen the home page. You clicked on the Get Started button, and the Get Started button didn't take you anywhere. I apologize for that. And now this button works. So once you go here and click on Get Started, you will be taken on a journey to all different types of price and time relationships, and we have an online store as well. From today's video, what we're highlighting is this week's theme is volume. We have two manuals that are on discount, and the code for this teaching to get 10% off is first order. Training and 1 hour, 60-minute cycle is also 10% off with the coupon code first order. And I want to thank you. And that's it for now. I'll see you on the next one.